Schiff Show.
Welcome, everybody. This is Peter Schiff here at SchiffRadio.com. It's Jobs Friday. We got the government's numbers earlier this morning on the creation of non-farm payroll jobs for the month of October. Basically, we created fewer jobs than was anticipated. 80,000 was the number of jobs that was added. Almost all of the jobs added were in the service sector. I think we created 5,000 manufacturing jobs after losing manufacturing jobs in each of the past 3 months. The problem, of course, well, there are many problems with this number. One is that we're simply not creating enough jobs. 80,000 jobs isn't going to do it. There were some upward revisions to prior months, which might be one of the reasons that the unemployment rate inched down to 9% from 9.1%. Although the U6 unemployment rate, which is far more indicative of the real state of the labor market, is 16.2%, which is also slightly down from 16.5 in the prior month, but still north of 16%, which is a better read on the state of the U.S. labor market. But the other problem is that we are continuing to create the service sector jobs. And the problem with service sector jobs is they don't produce stuff. And so all of the stuff that the employees, the people who are now getting these paychecks, a lot of what they're buying has to be imported because they're not making stuff. And so what happens is we create more consumers, but we don't create more producers. And so what they consume has to be imported, which means bigger trade deficits, a weaker economy. It undermines the currency. We can't just create jobs. We have to create productive jobs. We have to create the right kinds of jobs. And unfortunately, those type of jobs are very difficult to create given the regulatory and tax environment that exists. So as a result, we will continue to add jobs in sectors that are actually bloated, and we're going to continue to drain resources and jobs away from the very sectors that are an important part of a real economic recovery, to the extent any kind of recovery is going to emerge. Meanwhile, this is Open Line Friday. We don't have any guests. We just have 2 hours of calls. So if you want to call, it's 855-4-SCHIFF, 855-4-SCHIFF. Also, I'm breaking between the hours. I'm going to be doing a hit on Fox Business to discuss today's jobs numbers. Also, later on this evening, Fox Business is doing a live show tonight, maybe because, we're having to do with Greece and the fact that we're getting this confidence vote on Papadreas, which I'm going to be talking about later. But they're going to be doing a special live show at 9 p.m. Eastern, and I will be a guest on that show. So if you want to check in and listen to my comments, you can listen to them later this evening on Fox Business, as well as listening to me on Fox Business between the 2 hours of this program today. But when the jobs numbers first came out, we had a rally in the market. Now that rally has completely reversed. The Dow Jones is down 116 points. The NASDAQ down 27 points. Even gold and silver down today. Gold ETF down about $10. The dollar is higher. The only thing, I think crude oil had been higher most of the morning. It looks like it might have turned it down. But we traded earlier this morning at a 3-month high in oil prices. We got above 94. Let me see what the high was. I think it was above 94.60, which was a new high for 3 months. Oil is still acting very strong. Even with today's sell-off, oil is holding up pretty solidly. The catalyst, I think what people are worried about is they're worried about this Greek confidence vote. What happened last night was that Greece shelved the planned referendum on the bailout. So it's not going to be put to a popular vote, but still it's not a guarantee because Papandreou has got this confidence vote, and if there is a no confidence vote, then it's going to put the whole thing back in doubt. In fact, maybe it won't happen at all. I think Papandreou is trying to basically get the opposition on board with this plan so that they can't use his agreeing to it as a political weapon, because obviously it is very unpopular. And so what he wants to do is he wants to put his opposition in the uncomfortable position of having to support this deal as well, so that they can't later go back and use it against them. Now, maybe this is putting politics above the interest of your country, but hey, that's what politicians do. It's all about what's in it for them. What's good for the country is always a distant second to what's best for their own careers. Yes, if a politician can help himself and help the country, yeah, sure, he'd do that. But if it's a choice between his own interest and the interest of the nation that he represents, pretty much all the time, they are going to come down and do what's in their interest rather than in the national interest. That has always been a problem for democracies throughout the world, that our leaders are there to serve themselves more than their nations, and they always will do what is politically expedient rather than what is sound economics. Anyway, look, we got a lot more coming up on the show. I know we had a short segment. We had a little bit of a problem technically beginning the show this morning, but hopefully all the bugs are worked out and everything will go seamlessly between now and then. Again, if you want to call, 855-4-SCHIFF, 855-4-SCHIFF. We'll be right back with more of the Peter Schiff Show on SchiffRadio.com. The Peter Schiff Show.
To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America, we're sorry. Peter Schiff is back on the air.
And we are back. This is Peter Schiff here at SchiffRadio.com. Between the break, I just found out that the President, Obama, is going to be holding a press conference shortly on the G20 meeting and what is going on in Europe and with the Greek situation. So if I happen to catch any of that during the break, I'll try to talk about it. Although somebody happens to be watching that press conference, I'm not exactly sure when it's going to start. It might be an interesting topic to call in about if he says anything at all relevant. Who knows what he's going to say. But if you're listening, it'd be an interesting phone topic. Hey, before I take some calls, I got to mention the IPO du jour, Groupon, and this has been a highly anticipated stock market IPO. It's finally coming public. They priced it today. Hey, remember, I am not allowed to give any investment advice, so I am not talking about Groupon as an investment to recommendation. I'm just mentioning it because it is finally being priced. It was initially going to come out, I think, at 16, 18 bucks. They ended up upping it to $20. They increased the size of the offering from 30 to 35 million shares, which only represents about 5% of the total shares of the company. Valuing the company, I think it's some $16 billion. I mean, again, you're talking about nosebleed valuations for companies like this. I'm not even sure if Groupon has any earnings. I know I get a lot of emails from Groupon. I signed up one day just to see what it was about. I've never actually used them for anything, but I have looked at their emails, and pretty much it's always the same stuff. It's that they're giving you a discount on. There's not that much variety of what I get. I pretty much get the same stuff over and over again. So I'm not really sure how much money Groupon can make. The problem, though, with a lot of these companies is that they have very little operating history. Groupon hasn't been around very long. It's only been around for, a few years. And they're operating online. There's very little barriers for entry. So you have no idea what competition might come in. If Groupon's got a good idea, they come out with it, then all of a sudden people copy it, and now they get a much smaller market share. Or maybe it's a fad. Maybe it's, how do you know that 5 years from now the people that are using Groupon are still going to be using Groupon? So in general, I don't know why companies with such short operating histories are even able to go public. You would think that a company would have to be around for a longer period of time to have a real track record of sustainability before it would be able to go public and attract long-term investors in the stock market. But I think what Wall Street really does with a lot of these IPOs is it feeds the speculative frenzy on there to flip these things. You get a lot of interest in all these types of hot IPOs. People trade them right off the bat, but somebody usually ends up holding the bag because most of these things end up not doing very well because they end up getting overpriced at the IPO. And so it's very, very dangerous either way, whether you like the company or don't like the company. There is a lot of risk in these IPOs. Again, I can't really comment as to whether I think this is a good stock to buy or not. regulators kind of won't let me. So I could talk about it a little bit, but you're going to have to figure out for yourselves whether or not this is a stock that you would want to buy. But anyway, we'll keep an eye on it during the day and see where this stock ends up trading. You know, some of the other IPOs, I'm looking at LinkedIn, which was one, that's down 9% today, and that was like a similar hot IPO. Remember, that stock got as high as 122, then fell as low as 60. It's right now at 79. I don't know if maybe some people are lightening up on their LinkedIn so they can jump into this one. Pandora Media, get another one of those. That got as high as 26. It's now at 15. You know, it got as low as 9. So all these stocks have been very, very volatile. And Groupon is of the same type of company, so we'll see what happens during the course of the day. Anyway, let me go and grab a couple of phone calls. First up is Chris calling from Manhattan. Chris, welcome to the Peter Schiff Show.
Hey, Peter. First thing is that I think Groupon will eventually go to zero. That will probably be my first short sell transaction. But going back to Goldline, I do agree that they are a ripoff, basically, that they used high-pressure tactics, that they overcharged for gold. But I think even you admitted that you weren't sure if it was even fraud. Now, I looked at everything that's being alleged against them, and yeah, they're paying their salespeople to sell, you know, the bigger marked up gold, but I don't see this as being fraud, and I'm surprised that you're taking your stance that the government should have gotten involved, and that the market. This to me looks like a classic case where the market should have fixed this, and you know everyone should have.
Well, I listened to a phone conversation that somebody sent to me, and it was my opinion that there was fraud committed during that phone call. I mean, it's one thing to try to sell something and get a high markup, but you can't lie in the process. If you say something that's just not true, then that's fraud. And so on the phone call that was made, the guy called up. He wanted to buy gold as an investment. He said, "I just want to profit from the appreciation." And the salesman said, "Well, if you're interested in making money on gold, you get a lot more bang for your buck buying these high markup coins." Of course, they didn't call them high markup coins, and of course that was false. I mean, you get a lot less bang for your buck when you're buying a coin with a 67% markup. You hardly get any bang for your buck because you have to let the gold price go up almost 70% just to break even. So he told the salesperson that he wasn't interested in being a coin collector. His interest was to benefit from the rise in the price of gold, and the broker said, "Well, if that's what you want to do, you'll get more bang for your buck if you buy these French roosters," or whichever one it was. That was an outright lie. That wasn't the case. And there were other things. She said that these are the coins that I buy for my friends, my family members. I mean, even if that's true, it's only because she doesn't mark it up 67% to her family members. I mean, there's no way she's doing that. I thought there were several things on there that were fraud, but I think the whole marketing thing is fraud because they're getting people to do something that there's no way they would do if they had all the facts. I mean, nobody in their right mind is going to buy a coin and pay a 67% markup when they can buy the exact same coins. Even if you want these European coins, you can buy the exact same coins for, a 5 or 10% markup any place else on the internet. So if you're buying gold as an investment, nobody would do that. Nobody would buy these things. It's all because Goldline is selling them. That's the only reason that people buy them, because there's this high pressure to sell them. And I know that these salesmen are under incredible pressure from the company to push these products. Anyway, hey, hold on. I'll finish this at the other side of the break. You're listening to the Peter Schiff Show here at SchiffRadio.com.
Look, kids, you need to change the tune. That avenue you traveling, unraveling soon. You'll be battling doom. What does it matter to you?
The Peter Schiff Show.
Your appearance is more important than what's really real. Cause here it is, situation's bad, not meaning good. A lot be in the hood that got me with nowhere to put my trust in. No discussion, spontaneous combustion.
We now return to the Peter Schiff Show.
Call in now, 855-4-SCHIFF.
That's 855-472-4433.
The Peter Schiff Show.
This is Peter Schiff here at SchiffRadio.com, and we are talking about Gold Line with Chris in Manhattan. And Chris, are you still there?
Yes. Yes. So,
hello.
Can you hear me? Hello?
I'm not sure if anybody's here. All right, Chris, are you there?
Yes, now I'm here.
All right, yeah, we again having more technical difficulties. Apologize for that. But getting back to Gold Line and whether or not what they're doing constitutes fraud or just unethical business activity, or and in some cases it is the latter. I mean, there are people who literally lay down, who call up and say, yes, I heard, I got your name, I listened to a radio show host, I want to buy some gold, what do you suggest? They say, well, buy these French roosters. How much are they? Okay. I mean, there are people where there's no fraud involved at all. They just call up and they just buy because they trust. And that is part of the problem. And this is one of the reasons that Gold Line has the business model it does. It advertises heavily on radio talk shows because it counts on the people who call up to trust that the talk show host is recommending this company because they're the best deal around, that the talk show host is shopped around, and therefore they don't feel any reason to shop around. They think that they're getting a good deal. And then, of course, the company uses that trust to rob them blind because it gets a customer that doesn't shop around. I'm convinced that anybody who shops around doesn't deal with Gold Line. It's only because they don't shop around. And why don't they shop around? Because they think the talk show host who recommended them shopped around for them. And now you could say, well, that's a mistake. That's just them being naive. And the firm is simply taking advantage of that. Although they're not an innocent bystander, they're paying these talk show hosts a lot of money through these advertisements in order to get their audience to come, like sheep to be sheared. But there are people who, don't just lay down, that ask questions, and I think a lot of these people are given the wrong answer. I think they're deliberately misled because if you think about from the salesman's perspective, they make about 20 times the commission if they can convince the caller to buy these high markup products versus a more legitimate product. So if I'm a Gold Line salesman and I've got a guy on the line, and if he buys Maple Leafs, I make $100. But if he takes the same exact money and buys French roosters, I make $2,000. $2,000 versus $100. I mean, that's a powerful incentive to do whatever I can to get this to happen. And of course, the owners of the company, if you keep selling these Maple Leafs, you're going to be fired. You're going to get reprimanded. You're not going to get any leads. And I think the whole process of trying to convince people even after the fact, even if they end up buying Maple Leafs, when the money comes in, and I know this happens because people have told me about it, and this has been confirmed by the indictment or the complaint, that when even if somebody buys the Maple Leafs and the money comes in, when they receive the check, they put another salesman on the phone to call back the person and say, hey, we got your money. I really think you're making a mistake buying these Maple Leafs. You really should buy these French roosters instead. And they try another time. And oftentimes they succeed. Now, Gold Line is trying to say that, hey, they're not doing bait and switch because 40% of the ounces they sell are gold. Well, maybe 40% of the ounces are gold, but that's because they mark up the other coins so much more. So probably my guess would be 75%. If 40% of the ounces that they sell are gold, then 75% of the dollar volume is coins and only 25% of the dollar volume is bullion. But that simply represents the 25% that they couldn't convince to buy the higher markup products. I mean, because not everybody fell for it, doesn't mean that they're not doing it. So I do think that it constitutes fraud, but we'll see. But even if it's not fraud, I mean, it is completely unethical to charge somebody a 67% markup. And they do whatever they can to disguise the true extent of their markup because they talk about it as if it's a 35% markdown or spread, 35% spread. And, of course, their bid is a phony bid. They actually bid the coins above what their cost is to buy them so they can say the spread is 35%. Because if you price the coins from their bid, it looks like a 54% markup, but it's not. It's 67 because that's what they mark it up over their cost. And the real problem is if a lot of their clients ever tried to sell these coins, they would collapse the bid because they can't buy the coins for more than they're worth. They only do that to make it look as if the markup is smaller. So they go to great lengths, I think, to disguise it. They don't want to be that transparent, because I think if people really appreciated how much they were paying. Look, people are buying these coins as an investment, right? And so if you want to invest $10,000 in gold, where are you going to go? Are you going to go where if gold goes up 70%, you make 60% on your money? Or are you going to invest where if gold goes up 70%, you don't make anything? You just break even. If your goal is investment, there's no way you would pay these markups knowingly.
I don't know. I don't really see this as much of a fraud case. I don't think Gold Line's going to really get in trouble at all.
I don't know. Well, do you think all the people who bought gold, let's say when gold was at $1,200 an ounce, and now it's at $1,700, and they're still down significantly on their investment, do you think if they found out that they were down and if they found out that they could have bought gold a different way and been way up, do you think that they would be happy about what they did?
No, I think it's a bad deal, but I want.
But all right, well, given that it's a bad deal, why are so many people falling for this bad deal?
I agree that they're using high pressure tactics. That's number one. I mean, but I don't think there's anything wrong with that. I don't think there's anything wrong with an employer saying, "Hey, I'll pay you 20 times the commission to sell this product." Now, if they're really lying and they're really, being deceitful, which they are to a degree, but from what I read and from all the allegations, I don't think this is really going to stick. Yeah,
well,
I think it's a bad way to buy gold, but I don't think anything's going to happen to them, and I think they're going to continue selling.
Well, we'll see. I mean, people are still going to buy because they're not even shopping around. But they say a lot of things that are false. The people that are on the other end of the phone believe that the salesman is somehow got their interest at heart, that they're like an investment advisor, like a broker who's trying to help them make a good investment. They don't realize that they're dealing with a used car salesman who's trying to push a lemon on them. They don't look at it that way. They trust the talk show hosts who have said, call these guys up. This is who I trust. They're going to give you a good deal. So they come there under the impression that they're going to get a good deal because they were recommended by someone they trust. And then they don't know that the person is being dishonest, that the person is working against them. These are novices that in many cases have never bought gold before. They have no idea. And I also think they're being lied to about confiscation. I think that they're talking about this. They're saying if you buy these coins, they're going to get confiscated by the government. And if you buy these other coins that are so much more expensive, of course they don't say they're much more expensive, then they won't get confiscated. That's just not true. There is nothing about these European coins that would have exempted them from confiscation from the 1933 order. It's just not true. They're not rare. They have no special value. The only thing is, they're older, but there's no rarity attached to them being old. Something could be old and not have any numismatic value because there's a lot of these things. They're not in unique condition. These are circulated coins. They're all over the place. They have very little value beyond their bullion content. And of course, there is going to be no confiscation the way there was in 1933 because we're not on the gold standard anymore. Is it possible that the U.S. government will confiscate gold again? Yeah, but for different reasons. And if they confiscate gold, they're confiscating those French roosters just like your Canadian Maple Leafs. There's not going to be a difference. So I think it's a scare tactic. I think they're trying to get people to make a bad decision simply because they make a lot more money. And so we'll see. I mean, I think a lot of it does constitute fraud, but a lot of it is going to depend on what the witnesses say, what they were told, and how many people corroborated, whether or not it rises to the level of fraud. Because I said, maybe it's not fraud. Maybe it's just unethical. Maybe it's just, really bad business practices. And hopefully, the market will put an end to it. And that's one of the reasons that I was out there criticizing this. That's why I wrote that report that you can download at goldscams.com. So people are made aware of the right way and the wrong way to buy gold.
Well, you brought up a good analogy with the used car salesman. If this constitutes fraud and you thought that, hey, what took the government so long? Do you think the government should be in every car dealership who does the same exact thing?
No, because cars are not an investment. People know that a car is going to lose value after it, and people know that the car salesman is trying to sell. They don't realize that the coin dealer is a car salesman. And here's the irony of it. Everybody knows if you buy a car, the minute you drive it off the lot, it loses a lot of value. But you know what? If you buy a brand new car, you can drive it for a year, right, and then sell it as a used car a year old, you're going to lose less money than if you buy a coin from Goldline. Gold goes up 10 or 15%. You turn around and sell it back, you're going to lose more. You lose more money buying a coin from Goldline than you do buying a car and driving it off a lot. I mean, so these coins are actually worse investments than cars. Nobody would do that. Nobody is knowingly going to drive that coin off that lot, knowing that they're about to lose all this money. I would have to think that the only way that you would do something that dumb is if you were lied to. If Goldline told them the facts, if Goldline said, here are the facts, nobody would be buying those coins. So they can't tell people the facts, because if they told them the facts, they couldn't sell the car. It's like if you told somebody, hey, we roll back the odometer on this car, and and it's about to fall apart, nobody's going to buy it.
Yeah, but since when do you have to provide every little fact about what you're selling? I mean, because then you're inviting huge intervention. I'm not saying you do, but the fact of the matter is that all these coins are being sold. So many people are choosing to buy these coins. 75% of their sales are of these types of coins. They've got to be saying something to make that happen. There's got to be some fraud involved. That's my gut. We'll see what comes out at this trial. Look, hey, maybe they'll be vindicated. I don't know, but either way, it's bad. It's bad business. Whether or not it's fraud or not is up to a jury to decide. But either way, it is it is a bad way to treat your customers. Anyway, hey, we'll move on to another topic. This is Peter Schiff. We'll be right back. We got a lot more of the Peter Schiff Show at SchiffRadio.com.
The Peter Schiff Show. Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million. Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
This is Peter Schiff here at SchiffRadio.com. I was listening to President Obama speaking during the break. He is holding his press conference now. I heard him talking about the need to pass his jobs plan, so I thought he was going to be talking about Greece. Instead, he's trying to put a plug in there for passing his jobs plan. Of course, just because he calls it a jobs plan doesn't mean it's going to create any jobs. You can call it whatever you want. And, of course, the president has labeled opposition to his plan as people being opposed to jobs. What if the opposition is based on the fact that his jobs plan is actually a jobs destroying plan, and maybe they don't like his plan because they don't want to destroy jobs. But anyway, he never looks at it from that respect. Anyway, we got a lot of people on hold, so let me keep moving along the board. And next up is Tony calling from Las Vegas. Tony, welcome to the show.
Hey, Peter. I have a question about valuing gold based on inflation rates. When you evaluate the stock, you can look at the P ratio and the growth rate and see if it's overvalued or undervalued. If you have inflation, say, of 10% a year for the next 5 years, how can you use that number to see if gold is overvalued or undervalued so you know when to sell in the future?
Well, remember, you don't value gold the way you value a stock or the way you would value real estate because there's no income stream. See, normally a valuation of an asset is based on the income that it's able to generate. Even if it's not paying a dividend, it's growing its earnings, and you can anticipate that at some point it can pay a dividend. So you're looking at the growth of the value of the asset. That gold is not an investment the way stocks or real estate are. Gold is the same thing as cash. So you're asking me, the question is, how do I know how to value the dollar? What's the dollar worth? What's the euro worth? What's the yen worth? Because you don't have any earnings. So, you can try to, come up with a valuation. Maybe you can use the interest rate, but of course the interest rates on dollars or yens are practically zero. But I think you could try to look at the supply, how many have been created, how many are likely to be created relative to the products that you can buy with the currency. But so it's not the same thing. So I think with gold, gold is really a way to measure the value of those fiat currencies. So when you see the price of gold rising, what you're discovering is that the value of the money is going down. They're printing too much money, and because they're increasing the quantity of money faster than the demand for that money, you're seeing that reflected in the price of gold. So that's why you would buy gold. You're buying gold as an alternative to owning currencies because currencies are losing their value. And if you don't want to buy stocks and you don't want to buy real estate, you want to just save your money instead to maybe buy those things at some later date, where are you going to store that purchasing power? Are you going to store it in a currency, or are you going to store it in gold? And maybe if the governments were not printing a lot of money, if they had high interest rates and we had tight monetary policy, you might decide, well, why would I want to own gold? I can own dollars. I get 7%. There's very little inflation. The government is acting responsibly. I have confidence in the value of the dollar. You wouldn't own gold. But in an environment that we have today, where interest rates are zero, they're cranking up the printing presses. They're printing dollars like they're going out of style, and they're going to keep on doing that because no one in Washington is going to cut spending or raise taxes of any significant degree. You just want to own gold.
Well, I disagree with you. You say a lot about stocks don't have value unless they pay a dividend. Apple grew 30-40% a year, and the stock went through the roof, and they never paid a dividend.
No. I didn't say they have to pay a dividend. They can also grow their earnings, but the anticipation is that at some point the company will pay a dividend. And so as Apple gets bigger and bigger and earns more and more money, the ability to pay a future dividend is higher and higher. And what you're doing is you are putting a present-day valuation on those future income streams. Because right now what Apple is saying is, I don't want to pay a dividend today. We're going to retain all those earnings and invest it in growing the business, and we'll pay even higher dividends in the future because of the retained earnings that we don't pay out today. And so that's what generally you have a growth stock. But at some point, a growth stock stops growing and kind of plateaus, and at that point, they have to start returning income to their shareholders by way of dividends. But, you're still measuring Apple based on its earnings, based on its ability to generate earnings, which could be paid in dividends or could be used to generate additional earnings. But you have no earnings with gold. Gold doesn't earn anything. It's just there, just like dollars don't earn anything. The dollar doesn't earn anything unless you loan it out, unless you invest it. And you can do the same thing with gold. You can loan your gold. You can take 100 ounces of gold, and you can make a loan to somebody and say, hey, pay me back 100 ounces of gold in the future and a year from now and give me 1 ounce interest, and you can make a gold loan for 1%. I mean, people can loan gold, and they do it. But a lot of people choose not to loan out their gold. They just hold on to it, just like people might decide to put money in a mattress and not put it in the bank.
But can't gold go up in a bubble fashion, even though they're not printing that enough to make it hit that level? I mean, how do you know if it's...
Well, sure. Well, any asset could go into a bubble. I mean, look, they had a bubble in Beanie Babies. You could have a bubble in anything. And, but I don't think you have a bubble in gold yet by any stretch of the imagination. Now, does that mean that there could be a bubble? And your question is, how would you know if there was a bubble? Well, it's very difficult sometimes to know, especially if you're involved in it. But look, real estate became a bubble. I mean, real estate could be a legitimate investment, yet it became a bubble. And I think there were plenty of signs for people who were understanding them that real estate was in a bubble. Tech stocks were in a bubble. So I think that if you see the same type of behavior and irrational buying with respect to gold that you saw in real estate or stocks, you can conclude it's a bubble. But I don't think we're there yet. I don't think we're even close. But anyway, hey, thank you for the call. I'm not sure if we have time for another call before the break. I'll try John in New York.
Hey, what's up, Peter?
Not much. What's your question?
About you, people like you and Ron Paul. It's really a comment. Conservative libertarians, I think you guys would convert a lot more liberals if you took a different tact when arguing with them, like, by acknowledging the fact that, laissez-faire type capitalism has a lot of problems, and just, basically offering...
Well, I would disagree that it has. What are the problems that you think it has? And I think socialism has a lot of problems. I think that capitalism minimizes those problems.
Yeah, well, that's two different things. See, I mean, of course, I agree with you about socialism, but I'm thinking that there are problems like inequality that can, I think that's generally
well, but
problem.
Inequality is not necessarily a problem, and you have inequality without capitalism. But I don't think inequality in and of itself is a problem. You're never going to have everybody being completely equal, and in fact, one of the reasons that people want to achieve wealth is because they don't want to be equal. They want to exceed. And you have an incentive. If everybody was equal, you would destroy all the incentives. But anyway, it's an interesting discussion, so stick around. We got a quick break coming up, and we'll be right back, and we will continue with your points when we get back. You're listening to the Peter Schiff Show here at SchiffRadio.com.
The Peter Schiff Show.
Make no friends in the pits and you take no prisoners. 1 minute you're up $500,000 in soybeans, and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on.
Call in now. 855-4-SHIFT.
That's 855-472-4433.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories,
your freedom.
The Peter Schiff Show.
It's not sounding right. Oh. This is Peter Schiff here at SchiffRadio.com. We are back. The second hour of the Peter Schiff Show is on. Those of you who tried to tune in to Fox Business and watch me, we had to cancel the hit because President Obama started his press conference late, and so it ended up going right over the time that I needed to be on. I had to leave to come back to do this show, so I couldn't do the hit on Fox Business. The last several times, every time the president speaks, it seems that I'm scheduled to be on some television show, and it ends up disrupting it. Maybe he's doing this on purpose. They're trying to find out when Peter Schiff is going to speak and make sure that they can have the president on at the same time to drown me out. I did hear a little bit of what he said through my headphones as I was waiting to go on Fox Business. One of the things that he was saying was that the higher taxes on businesses weren't going to hurt the economy because it was only going to affect a very small percentage of small businesses that make over $250,000 a year or something like that. But how the president could think that taking the money away from the job creators in the private sector and sending it to the job destroyers in the public sector, how that's going to grow the economy. How are you going to create jobs by putting taxes on business owners? I mean, where does President Obama think that business owners get the money to create jobs? If the government takes it away, they're not going to create as many. And does he think that the government really creates more jobs than the private sector? Certainly, it does. And any jobs the government creates are not going to be productive jobs. They might create some work, but we're not going to benefit from that work. We might actually suffer from it. Anyway, before the break, we were talking to John, who had called up about the problems, or one of the problems that he sees with capitalism is that there is inequality. Is that correct, John?
I misstated that. My point was basically I don't want complete equality, but I'm just saying that I think it would be more healthy for an economy and a society to have somewhat of a more evenly distributed, wealth than what we currently have.
Well, there are a lot of problems with that. First of all, is then you have to have some bureaucrat who has to decide arbitrarily that somebody has too much money and someone else doesn't have enough, and we have to take money away from the people that we believe have too much and give it to the people that we believe don't have enough. So in order to do that, you have to have this government authority that I think is inherently oppressive, and because you're basically legalizing theft. But I think if you actually look at the benefits of inequality, right? Number one, the reason that people want to be rich is because they can have a lot more. They can enjoy a much better life than if they were poor. So you have to have inequality to have incentives for people to create businesses and grow the economy. If people are all going to be the same, regardless of what they do, they're not going to, work to achieve wealth. Now, I understand you're not saying that we should take away all of the gains from hard work. They should just be better distributed. But I think if you look at the way capitalism works, in the opposite of capitalism, socialism, first of all, you don't have equality because you have the people who are politically connected end up being a lot richer than everybody else. But even if you set that aside and just look at the people, you have a lot of poor people. Let's say if you want to look at wealth and you want to put people on a scale of 1 to 10, let's say under socialism, everybody's a 1. Under capitalism, let's say now you have some people that are 10s, some people that are 9s, some people that are 8s. People achieve various degrees of wealth. But let's say under capitalism, nobody is a 1. Maybe the lowest anybody is a 2. But now, yes, is there a big discrepancy between a 2 and a 10? Yeah, there's a big discrepancy that didn't exist when everybody was a 1. But the bottom line is now nobody's a 1. The lowest anybody is a 2. So even though you have this big disparity between a 10 and a 2, the 2 is still better off than a 1. So it's capitalism that moved everybody up from 1 to 2, even if it moves some people up to 5 or some people up to 10. People are better off. And so capitalism lifts all boats. It just doesn't lift them all to the same degree, and we don't want that to be the case. But look, ultimately, everybody, maybe the lowest will be a 3 and then a 4. I mean, people, you're going to continue to move the bottom up. The freer the economy is, the more capitalism you have. The more the government tries to redistribute the wealth to make it fairer, ultimately what's going to happen is you're going to stop that rising tide. It's not going to lift as many boats as high as it would if the government stayed out.
Well, look, I mean, I agree, but my goal is to, advance libertarianism, and I don't think that the way you and like Ron Paul argue is helping, because you're not acknowledging any of the problems that we've had in the past.
Well, I acknowledge the problems that exist today that are the cause of government intervention, that because of the Federal Reserve and because of the monetary and fiscal policy and bailouts and subsidies, there is a lot of damage. I acknowledge that the middle class is suffering because of these policies that are being pursued, but they are not capitalist. They are socialist-type policies that are being pursued, and that is the problem. But, I mean, what do you think? What would you do differently if you were talking to somebody who was saying capitalism is no good, we need more government? What would you say that different from what I'm saying to persuade them that otherwise?
No, here's the difference. I would say, say they brought up an argument about, a monopoly or something like that, and they were price gouging because they had a monopoly. I would say, hey, maybe a monopoly would develop, but if you don't like their prices, then don't pay for it. Just like the situation with Bank of America right now. If they're charging for a service that they're providing, the debit card transactions or whatever, then just don't pay for it. Pull your money out of Bank of America.
Well, I don't know that that's much different than what I say when I get that question, although what I try to explain to people who ask that question is that most of the monopolies that exist are only monopolies because of a government-granted privilege or license. That it's the government that creates monopolies. It's the free market that breaks them up or prevents them from coming into existence. But I also would point out that if somebody was able to achieve a monopoly without any help from government, the only way they can do that is by keeping prices low. Because if the prices weren't low, somebody would come in and compete for those monopoly prices. So the goal of a free market is to give you low prices and high quality. And if you need a lot of competitors to do that or none, it doesn't matter. It's the end result that counts. So part of a lot of the antitrust laws are there not because they want to protect the consumer, but because they want to protect weaker competitors from stronger competitors. We don't want competition for the sake of competitors. We want competition for the sake of low prices and high quality. And if we can achieve that without a lot of competitors, hey, so much the better. Let them do something else. But anyway, hey, thank you for your call. We will be back. We got a lot more coming up in this hour of the Peter Schiff Show here on SchiffRadio.com.
The Peter Schiff Show.
Live with changed up places.
To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America,
We're sorry.
We're sorry.
Peter Schiff is back on the air.
This is Peter Schiff here at SchiffRadio.com. Well, the president's pep talk failed to inspire the markets. The Dow Jones down 185 points as we speak. NASDAQ down about 36. Gold still not rallying yet, but not selling off much either from the morning. It's down about $12. Oil prices, though, have reversed. They are now down, but not getting clobbered nearly as much as the stock market. So again, I think oil is looking very, very strong, and I think prices are headed higher, which I think is going to really put a damper on consumer spending this quarter and next year, as consumers are spending more of their money on gasoline and other necessities, and obviously have less left over for other discretionary purchases. Anyway, Groupon has begun trading. It actually opened up at $28. That gave the people who were lucky enough to get the shares on the IPO an immediate 40% gain on their speculation. It actually went as high as $31.14, pretty much right in the opening few minutes of trading, which meant a better than 50% gain. The stock is now down, or still up, but now it's trading just below $27 a share, still considerably above the $20 price. But if somebody paid $31 earlier this morning, they're probably not happy at $27, assuming the person who paid $31 still owns the shares. They might have already sold them. There is a lot of day trading, a lot of speculating going on in these names. This is always the case. And it is a very dangerous game for the average investor who's a long-term buyer to be getting involved in these things, although I cannot give any advice one way or the other. Anyway, I will go back to the phones. Waiting on hold is Nate calling from East Lansing, Michigan. Nate, welcome to the show.
Thanks, Peter. I got a quick comment and then two quick questions if you can answer them. First, I was watching on YouTube the other day this video of Ron Paul called Ron Paul the Master, of like these predictions, that ridiculous, crazy predictions that he made in like 1998 and the early 2000s. That it just shows how like pretty much they've all come true. It reminded me a lot of your Peter Schiff was right video. But I thought your listeners could benefit from that. But secondly, in the case against the Fed, Murray Rothbard talks about getting back to a 100% gold-backed dollar, and how in his deal that he would have the Federal Reserve buy up all outstanding Treasury debt, and at the same time, as they're buying up the Treasury debt, raising reserve ratios slowly up to 100% reserve to stop inflationary pressures, and then once that happened, back the dollar with gold and take the Fed.
Well, I'm not sure I understand that, because if the Federal Reserve is going to buy up all the treasuries, that the very act of doing that is creating a lot of inflation, because the only way to buy up all those treasuries is to print a lot of money. So right. That's going to be inflationary. I don't think that that is the best way to do it. I don't know that we want to monetize the debt and then try to go back to a gold standard after all the debt has been monetized. I think that would do a lot of damage to the dollar. I mean, ultimately, I think that we need to go back on a gold standard and restructure that debt. Now, I don't want to monetize it. But I think it'd be better to restructure it. I think if we went back on a gold standard, it would be very, very difficult, if not impossible, for the federal government to repay all that it has borrowed. In fact, it's just not going to happen. So if we go back to a gold standard, I think we have to restructure the debt. If we stay on a fiat standard, we can inflate away the debt. But either way, the creditors are going to lose. It's not like that in a restructuring, the creditors are going to be worse off than under inflation. I think that our creditors will be better off if they get paid in honest money, even if they get less money than they loaned, than if they get back all the money, but it doesn't buy very much. So, there is no way. I don't think there's any way, realistically, that we repay what we've owed. Just like I don't think there's any way Greece is going to be able to pay back what it's borrowed. It's just not going to happen. And that's why at least they've acknowledged that with a 50% haircut. But I don't even think the Greeks can pay 50% of their debt. It's just not going to happen.
Yeah. All right. My next question was there's some paper gold contracts out there and paper silver, like UGL and AGQ they're leveraged. I mean, I don't take out leverage to do it, but they move twice the price movement of gold and silver. Do you know what the downfalls of that are, other than obviously if gold and silver go down, that they go down quicker?
Well, that's the downfall. I mean, if you're dealing with a leveraged product and the market moves against you, it's going to move against you in a leveraged way. So, it works great if the gold price is going up and you're leveraged to that. It doesn't work great because if it goes down. But of course, if you're shorting it, that's what you want. I mean, a lot of people can short these products as well. So it depends on the bet that you're making. If you think gold's going to go up and you buy it, yeah, you make more money. If you think gold's going to go down and you short it, you'll make more money. But it's all with more risk. Whatever you do, you're going to make more if you bet right, but you're going to lose more if you bet wrong. The other risk is always that if you're buying one of these vehicles and there is leverage and gold prices really do move up a lot, there is counterparty risk. So there is always a possibility that this leveraged vehicle might not be able to get the gold that it has borrowed money to acquire. So that's a wild card that could create problems.
So that would that be like, say I'm long? I mean, I'm long on those, but would that be the case where if gold went down super far, I mean, they could face a margin call or something on there?
Well, I don't think you can. No. You can't face a margin call in these products. I think that you can lose all your money, but you're not going to have to send in more unless you just voluntarily buy more shares. No, I'm talking about the case where gold prices skyrocket, and then the leveraged vehicle can't get its gold, and it ends up that it doesn't actually own the gold because the counterparty to its contracts can't deliver. And so you think you own all this gold, and it turns out that you don't. That is the wild card I'm talking about with the counterparty risk. Assuming that there is no real counterparty risk, the only risk is that you are levered up. And so you just like you can make more money if gold goes up, you lose more money if gold goes down, just like any other leverage back. It's a two-sided sword. It's great when it's going your way, and it's terrible when it's going the other way. All right, well, thank you for the call. Next caller is Sean, who is calling from British Columbia, California. Oh, no, British Columbia, I guess, Canada. And by the way, if you want to call, we do have plenty of room on the boards now at 855-4-SHIP. I know a few callers had dropped out. Maybe they thought it was going to be too long. But there is now open lines if you want to call the show, 855-4-SCHIFF. Anyway, we'll go back to Sean. You're on with Peter Schiff.
Yeah, hi, Peter. I just had a question about I've been in these gold stocks now and silver stocks now for 3.5 years, waiting for them to do something. They don't pay dividends. They give me a heart attack every 2 months. And I'm a small potato guy, so I'm like a $70,000 no broker's ever going to phone me because he's going to have 600 clients my size. So I'm on my own out here having a heart attack every couple months. I'm just thinking I'm just going to go to Canadian cash, and just sit there and just, I got some bullion. It's doing great. I'm happy with that. Of course, I can't get all into bullion. So what's the worst case scenario that's going to happen to me if I just stay in cash and wait for the big one?
Well, first of all, if you buy the majors, you will get some dividends. You can get 1% to 2% dividends on a lot of the big companies. So you can get some dividends. It's not no dividends. But why are you having a heart attack? Just because they go down? I mean, why would that create such a problem for you? I mean, do you have that little conviction that ultimately these stocks are going to go up that you would be so nervous anytime they go down?
Well, Jim Dines was recommending uranium, and it was supposed to go to the moon, and and it was supposed to ride out all the recession. He predicted all the real estate stuff. He predicted everything else, and uranium just crashed and stayed down. So,
well, uranium had a bit of a bubble. Maybe you missed that. But anyway, hey, hold on. I'll talk a little bit more about this after the break. You're listening to Peter Schiff here at SchiffRadio.com. We've got a full half hour coming up, so do not go away.
The Peter Schiff Show.
We now return to the Peter Schiff Show.
Call in now, 855-4-SCHIFF.
That's 855-472-4433.
The Peter Schiff Show.
And this is Peter Schiff here at Schiff Radio talking to Sean up in British Columbia, Canada, about gold stocks. And Sean, you say you bought your gold stocks about 3 years ago?
Yeah, I bought them around 2008, and then I watched them all crash, and then they all came back. But the price of gold has doubled and tripled, and silver as well. There's just something creepy about these stocks that they just don't do anything.
Yeah, okay, so you bought, because 3 years ago today, the gold stock index was about, the Huey was around 200. It's now tripled that at around 600. So, but even if you bought at the peak in 08 at March, the highest the index got was 519. So we're 585 now minus 519 divided by 5. So you're talking about a 13% gain over 4 years. So, yeah, I mean, you're talking about 3% a year, plus your dividends maybe 4% a year. So, yeah, I mean, it's nothing spectacular if you happen to have put all your chips into gold at the exact top of the market. Chances are you didn't buy the exact high. But gold stocks are undervalued, I think. I mean, that's why in fact, historically, they've never been this cheap on a relative basis relative to bullion. I can understand maybe your frustration that, why haven't these stocks done better? Personally, I think it's just a question of time, and I think they will do better. I mean, I could be wrong, but I've got a lot of my own money in gold stocks, and, I think that the fact that they haven't gone up is just an opportunity for me to continue to buy gold stocks, which is something that I do on a regular basis personally as I keep buying them. And the fact that they're still down, I just think I'm getting a good deal on them. And I think it shows that there's just a lot of fear in this market and not greed. But even if you're thinking that you don't want to ride it out anymore, I mean, maybe you want to just buy gold bullion. I don't know why you would want to just put your money in cash, especially if you see the reason that gold is rising, and if you're buying gold stocks, it's because you think the price of gold's going to rise. I wouldn't give up on that. Maybe you might want to position yourself to trade a little bit if you're really worried about it. I mean, maybe we'll get another sell-off. Maybe you can sell some of your position and try to buy some back the next time we get a big drop if you're not in a position to just buy more when the market gives you those buying opportunities.
Well, it's the trading. I've been doing a little bit of that, and that's what's been giving me a heart attack. And then it's a broker. And no offense, you're a broker. I mean, brokers are never going to tell you just to stay in cash. They're always going to tell you just to buy something. Whatever you do, buy something. And I'm just wondering, just if you could just give me devil's advocate, what would be, is the main worry that if I just stay in cash, in Canadian cash, that I'm going to miss the trip to heaven that when the stocks finally take off, or is there?
Well, I think Canadian cash is a lot better than U.S. cash. So I don't think that it's as bad as holding Canadian dollars. So but if I think that gold stocks still are inexpensive personally, and I think if you want to own gold stocks, I think you don't want to wait until they just take off and then end up buying them when they're double the current price. But I do recognize that we have been in a trading range for some time, and I'm not going to tell you that we're not going to sell off again. And so, if you want to try to do that, there's nothing wrong with taking something off the table and waiting for a lower price. I don't know that I would sell everything, but I do it a little bit differently because I'm constantly earning money, and so I wait for the dips. I don't buy into the rallies. I always buy on the dips. So whenever there's a big sell-off, that's when I add to my position. I don't necessarily take anything off the table when it rallies, but depending on what kind of capital you're working with, if you're not having additional income to invest as prices come down, if you just have a fixed amount of money, then you could looking for a trading opportunity. Now, we just had one of those, remember, right? We had a big drop. We were up near the highs at 640 on the Huey, and it dropped down to 480. I mean, there was a great buying opportunity to buy more. Now, right now, we're kind of, closer to the higher end of the range. I think that we're probably going to get a move back up towards the highs at a minimum, that's 620 to 640. That would be an opportunity for somebody who wants to trade to maybe lighten up and make a bet that maybe we sell back off down near 500 or lower again, in which case you could reposition. But, one of these days, I don't know when it's going to be, but one of these days, it's not going to have that sell-off. One of these days, somebody's going to sell their gold stocks, hoping to buy them back cheaper, and they're not going to get that chance. The question is, how many times is the market going to sell off before it takes off? I don't know. And that's where you might have the heart attack every time. If you're trying to trade it all the time, that's when you're more likely to get nervous that maybe you did it wrong, or second guess yourself, or end up flipping, ping pong. You sell it out because you think it's going to drop, and then it rises, then you panic and you buy it, and then it goes down, you sell it, and you end up losing a lot of money because you keep acting on emotion. And so it's easier said than done when you says, sell it when it's high and buy it back when it's low. It's easy to say. It's not as easy to do it real time because a lot of emotion gets in the way.
Well, no, I thought I was being a real clever guy there. I read the news. I heard Greece was going to go to a referendum, so I got in there and I put in some sell orders to kind of capture some of the gains I'd made on the recent little crawl back. And of course, it's the one time that gold kind of goes up and against the market where everything else crashes, and now I'm mostly in cash, and it's snuck up again, and it's just I'm just a small bit player. I make I got about $1,000 a month coming in that I can invest. The rest just goes to expenses. Maybe $1,500. I'm not doing too bad. My house is paid off, so I'm not rich. I'm not poor, but it's like I'm just such a bit player, and I'm trying to trade these markets, and it seems like gold goes up when everything else goes up, and gold goes down when everything else goes down.
Sometimes, and sometimes it goes with. Look, it's hard to do. I'm saying you've got a job, you're working for a living, you're trying to trade this. There are professionals that are trading for a living. So it's hard to win the game when you're doing it part-time as an amateur and you're trading against professionals. Look, my advice, and the advice I've been given, is you accumulate these gold stocks on weakness. Don't worry about the short-term noise. Just tune it out. And I think in the file now, I think gold stocks are going to take off. And I think the people who have been patiently accumulating them are going to make a lot of money. Now, I could be wrong. And there's risk, so you can't do it with money that you can't afford to lose. But if you're a believer in the gold story, as I am, and you think these fiat currencies are going to lose value, these gold stocks are good buys. And a lot of the smart money, if you look around at some of the hedge funds out there, pretty much all the guys that got the mortgage call correct, all the guys that were shorting the mortgages that saw the housing bubble, these are the guys that are all loading up on gold. So you got a lot of smart people that are buying gold for the same reasons, and I think you just got to be patient. Some of the people made a lot of money shorting mortgages. They sat short for 3 years before they cleaned up. In fact, some of them, these positions were going against them. So people had to endure some pain before they got the big payday. So that's also the case for people buying the gold stocks. It's not instant gratification. You got to be a little bit more patient.
Okay,
all right. Well, thank you for the call and good luck. And again, for the regulators, I can't give any investment advice on this show, so I'm just talking here. Anyway, next up, Eric calling from Indianapolis, Indiana. You're on.
Hi, Peter. Thanks for taking my call. My question is, I think we hear you say you want to stay out of assets priced in U.S. dollars. But, my whole 401k IRA, even though it's, I buy gold stocks or gold ETFs or even gold bullion, isn't that still based in U.S. dollars? And would you advise anything like, I'm 35 years old, would you advise anything like cashing that out early and taking the tax hit, because the U.S. dollar may fail?
Well, you're talking about you're cashing out your IRA, taking a tax hit so you can invest the money outside the dollar?
Yeah, I guess I kind of,
because you can do that inside an IRA. You can invest in physical precious metals in your IRA. You could certainly, invest in any one of these exchange-traded products in gold or silver in your IRA. You can buy foreign currencies. You can buy foreign stocks. You could buy mutual funds that invest in foreign stocks or bonds. So just because you have an IRA doesn't mean you can't invest for a collapse of the dollar within your IRA without having to pull it out and take a tax hit.
Okay, but, when I look at it, I see the amount of it in dollars. So,
well, yeah, but that's just a scorecard. Just because your IRA is priced in dollars, that doesn't mean that you have any dollars in your IRA. They're just saying, so let's say your IRA is just gold, and all you have in your IRA is 1 ounce of gold. Well, today an ounce of gold is about $1,700. So your IRA is worth $1,700. But what's in your IRA? There's no dollars in the IRA. There's just an ounce of gold. And so if the dollar collapses, and if gold is $10,000 an ounce, well, now your IRA's got $10,000 of value, even though it still has the same ounce of gold. So it doesn't matter. You're still protected from a dollar collapse if your IRA doesn't have any dollars, and of course if what you have in your IRA goes up as the dollar goes down.
Okay, that makes sense. Thank you very much.
Yeah, the only problem some people have with their IRAs is sometimes people have IRAs within a company and they have a choice of various funds that they can invest in, and their employers haven't really given them a good choice, that they're limited to a certain number of investments, and some of the best ones they don't have. And then sometimes people have and this is usually, it's a company plan, right, 401k or pension plan where it's gone through your company. And then the question is, do you try to roll it over into your own IRA? But oftentimes you can't do that unless you quit. And that is a more difficult decision. Sometimes it's the right one if you have a substantial portfolio and there's other alternatives. Maybe you can quit your job and act as an independent contractor to the same person, or if you can easily get a different job. It all depends on how much money we're talking about and how poor the investment choices that are being offered in the plans that you have. Anyway, we will be back. We have open lines. If anybody wants to call 855-4SHIFT, we have one more segment here on the Peter Schiff Show on SchiffRadio.com.
We all came from Africa. The Peter Schiff Show.
We all came from We all.
Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million.
Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
And this is Peter Schiff here at SchiffRadio.com, the final segment of the week. And remember, you can watch me on Fox Business tonight at 9 p.m., unless, of course, the president decides to make an impromptu press conference and hogs in on my airtime again. But anyway, before I go back to the phones, we got quite a few calls online again. There is just one sound clip I did want to play, and this is from the Morning Joe show yesterday with Jonathan Capehart, who is a Washington Post writer, happens to be black, is basically saying that he feels Republicans are afraid to criticize Herman Cain because he's black. Listen to his comments, cut one.
Why is it that Herman Cain is not being criticized? And I have to tell you, I wonder if there are Republicans, white Republicans, who are just afraid to criticize a black candidate for president. And I have to say, and I said it was a hand grenade, and I have to say, we're talking about President of the United States. We're not talking about some piddly position. He needs to be held accountable. If he does not know that China has nuclear weapons, if he does not, if he makes jokes about border fences.
All right, first of all, so they're afraid to criticize a candidate for president because he's black, but they have no problem criticizing the president, who also is black. So there's a disconnect there. Of course, I also think he's wrong in that plenty of people are criticizing Herman Cain. That last debate, people were jumping all over him for the 999 plan, so I think people are criticizing him. I think initially, early on, he didn't get much criticism, but I think that was more because he really wasn't perceived as a threat. He had a little support, so I thought there was no reason for somebody to go out and criticize him. I think now that he is a front runner, he is getting more and more criticism. But I don't know, is this reporter, what is his point here? Because it is possible that there are some candidates who are reluctant to criticize Herman Cain because they're afraid that somehow a valid criticism might somehow be used for a charge of racism. But the problem should be not with the fact that people are afraid, but why they're afraid and how easy it is in our society today to just level the charge of racism. And the fact that some people might be reluctant, to criticize somebody who should be criticized because they're afraid of how it's going to look, because of how this political correct society that we live in, where it's so easy to just accuse somebody falsely with racism. And, of course, nobody wants that. No one wants to be accused of being a racist. So he might have a point. That to the extent that anybody does try to handle somebody who happens to be black with kid gloves because they're afraid of the backlash. But certainly I think Herman Cain is getting a lot of criticism. Are people criticizing him because he didn't realize that China had nuclear weapons? I don't know. I think it's a very valid point for somebody to not know that. I mean, I was watching the Daily Show yesterday, and Stewart certainly was making fun at him for that point. But hey, I think he is getting criticism. But it is an interesting observation, and it's more so not a problem with the candidates, but with our society, with the media, and how quickly it is that they are to level a charge of racism, and why so many people are so overly conscious about not trying to say something that might allow somebody to make such an allegation, even when it's certainly not true. But anyway, let me go to the phones. First up is Scott calling from Philadelphia, Pennsylvania. Scott, you're on.
Yes. Hi, Peter. Thanks for taking my call. I have a question concerning ETNs, exchange-traded notes. How exactly do they work? And do you recommend them, without getting specific as to individual ETNs?
An exchange-traded note as opposed to an exchange-traded fund?
Yes.
Yeah, I'm not even familiar with you're talking about like a bond that trades as an ETF?
Well, I was
debt instrument?
One that's one of Jim Rogers' ETNs, based on, I think it's an agriculture index.
All right, but it's not really a note then. I mean, it's a exchange traded vehicle. It's an index fund indexed to a basket. I don't know that it's structured as a note. I mean, maybe it is. I haven't. In that, does it have a maturity date? Is it like an ETF where it has a specific maturity date where you get a value back or something?
I don't believe it does.
Yeah, I don't know. I mean, I'd have to look into it. I guess these are not products that I own myself, or they're not products that I have, sold to any of my clients. So I'm just not familiar with that structure enough. But I know that Rogers, did have a commodity ETF that was based on the Rogers Raw Material Index. We used to buy a lot of shares in one of Rogers' private partnerships for our clients that I don't know if it exists anymore. I think it got folded. But that was a partnership, and we used to buy that. And I know at some point that vehicle had some kind of public listing, but I don't remember the structure of it because I never really was involved.
Okay. Yeah, because he's got, quite a few. But, I do own some of the agriculture. And
there are a lot of agricultural ETFs that we own, and a lot of them trade in London, and some, that we own, which are baskets of commodities. And you can have a specific, you can design your baskets for the type of exposure that you want. And they represent a pretty good way to get direct exposure to these commodity products without buying a stock. When you buy a stock that operates in that area, then you've got a whole different set of risks involved and, of course, upsides involved. But if you just want a pure play on grains or, industrial metals or energy products, these ETFs, I think, are a good way to do that.
Oh, okay. Well, I know at least with the ETFs, there's a potential for dividends.
Yeah. Well, sometimes they can do that if they're creating their products through using contango in futures contracts, where they are able to generate a yield based on these contangos, and then they can use that to pay a dividend. Yeah. And sometimes also when they're using commodities, they're able to invest their cash, that is the margin, in T-bills and earn an interest, although the ability to earn interest right now is pretty minimal on these strategies given how low interest rates are. But if interest rates move up, a lot of these strategies will be able to produce more income, which they could use to pay dividends. But anyway, hey, thank you for the call. Next up is John calling from Cherry Hill, New Jersey. John, welcome.
Pete, hi. I had a question about, I've been investing in dividend-paying stocks for years, and I have to be honest with you, I'm very confused on how they determine dividends. And
yeah, well, John, you're going to have to stay confused over the weekend because we are out of time. I didn't realize that. But, hey, call up first thing on Monday, and maybe I can clear up some of the confusion with respect to dividends. Anyway, everybody have a great weekend, and I will be back on Monday with another 2 hours of the Peter Schiff Show. Hey, by the way, I'll be doing Monday's show from California, from our offices either in L.A. or California. Anyway, or Newport Beach. Anyway, bye for now. You've been listening to the Peter Schiff Show on SchiffRadio.com, the gold standard in talk radio.